I like to connect with people. I like to understand, what makes them tick and how I can help them. And so we decided that we were going to be the only new rental home company in America that was also going to offer preventative health and wellness options to our residents. And with that in mind, we created an app which is called Arc Living. And if you're an Arc Homes for Rent resident, you get the Arc Living app, and it'll give you things in 6 functional areas of health and wellness.
This is your daily real estate syndication show. I'm your host, Whitney Sewell. Our guest today, Jordan Kavana. Man, he has grown and scaled, and we are going to dive into how he has done just that over 2 shows. He developed one of the first single-family home rent platforms. Man, and it's not like your typical buying one single family home here, one after one after one after. It's a very different method, and man, to scale something like that. But he is the CEO of Arc Homes for Rent. And he's done numerous things and many successful businesses. One of Arc Homes for an investment platform, he founded in 2021. He's been doing this since 2008. Joint venture between TIM and longtime multifamily owner, operator, Electra America, focuses on build-to-rent homes and single-family homes for rent, included he includes this preventative health platform called Arc Living to all his tenants. He's going to share about that, but just in a way that he thought outside of the box, right, for his tenants, and man, the value that he is creating for them. He's got degrees and after degree from Harvard and in different places. Man, just a guy who has dove in, and man, he is now making just scaling and making it's just such a successful business. You're going to hear some challenges, though. You're also going to get to hear, man, the focus, right, of even where he wishes he had focused maybe, but where he says, man, you need to focus on these things to grow and scale a business. And we're going to dive into each of those things today. Jordan, welcome to the show. I've been reading about you and honored to meet you and have you on. You are definitely an expert in growing, scaling businesses. You've done this in numerous aspects or ways, and especially in different real estate businesses. And so I'm looking forward to diving in. Before we do, man, tell the listeners a little more about you, about Arc Homes, and maybe your focus right now, what you're up to.
Thank you. I appreciate it, sir. It's an honor to be here, and I appreciate your time as well. Yeah, so, Arc Homes for Rent started under a different company name in 2008. I started on the heels of the global financial crisis, and, we've been through a couple of different variations of our firm, although we've always been very much focused on housing and making housing affordable for the masses. We've come a long way. When we started, we were initially buying, repositioning, and selling homes throughout the country. As a matter of fact, in 2008, we were buying from California to Florida, buying, repositioning, and selling, finding opportunities in the market. And it was in 2012 that I decided that this was really going to become an alternative living option, meaning single family homes as rentals versus multifamily being what's most widely known, at least at the time, as the only rental option. And so since 2012, we've been long-term holders and investors in the single family asset class. I think that to answer your question directly, what Arc Homes for Rent is up to, we're doing a couple of really interesting things, and this all started around 2015. We decided, if we're going to rent homes, we want to make sure that it's the best possible living experience. So we're only going to rent newly built homes. That was one of the first things that we did. So today, if you look at our portfolio across 22 different markets, it's all brand new homes. And I should clarify, it's townhouses and detached single family housing. The second thing that we decided was that we wanted to connect with our residents in such a way where it would not only be a transactional relationship, meaning you need a new home, you come to us, you rent it, and then, at the end of a year, we say, do you want to renew or not? That didn't feel right to us. And I think that what's behind that is I like to connect with people. I like to understand, what makes them tick and how I can help them. And so we decided that we were going to be the only new rental home company in America that was also going to offer preventative health and wellness options to our residents. And with that in mind, we created an app which is called Arc Living. And if you're an Arc Homes for Rent resident, you get the Arc Living app, and it'll give you things in 6 functional areas of health and wellness, things such as mental health, movement, diagnostics, nutrition. So all these things that historically have been marketed to the 1%, we said, no, we're going to make that available and affordable and accessible to the 99%. And we're going to start with our residents. And so that's what we've been up to in terms of, how we set ourselves apart. A little bit about what the platform has done in the last couple of years and what our plans are here into the future. The firm merged into a partnership about 2.5 years ago with one of the world's leading real estate investors and operators. They happen to own a very large multifamily company as well. And we said, let's bring multifamily and single family under one umbrella. Let's create a platform that gives our renters the ability to move between multifamily and single family. Just for our listeners, you may know that multifamily is predominantly 1 and 2 bedrooms. Single family is typically 3 and 4 bedrooms. And so we said, hey, how great would it be to have one ecosystem where when people are moving out of multifamily because their families are growing or whatever the case may be, they're going to move right into our single family. And so that's part of what we've been up to since the firm has grown. We've created synergies between multifamily and single family. We've grown close to 10,000 units today. And into the near future, I should say, we expect that we're going to be in the kind of 20 to 30,000 unit range across the Sunbelt markets, which is where we invest. So I'm sorry for the long answer, but I gave you a lot there.
No, that's a great background. I love just the way you all looked at doing it different, right? Than maybe most of your competitors or most people that had done it before you. And I love how it sounds like you all came into it very strategically, even with a buy box, right? You only wanted newly built units. Right. And so I can imagine that helped in a number of fronts. Were you all building these as well? Or was it, you're buying from developers? What was kind of that scenario to grow in that way?
So our strategy bifurcates into 2 different areas. The first is what we call mini new bulk. So what we'll do is, as we have been doing for a long time, we'll go to builders, both public and private, and say, hey, we want to be your partner at the end of a quarter, or when you're about to close out a community, those last 15 or 20 or 50 homes, we'll buy them, we'll rent them, because we want our renters to feel like they're living in a community where they would own. And so that's the first strategy. And that's what we call, mini bulk single family rentals, SFR. The second strategy is build to rent, which I'm sure you've heard of. And that's essentially, horizontal multifamily. That is us developing or partnering with our preferred builders to develop a full community, just like you would find in multifamily, with all of the amenities, clubhouse, gyms, pools, etc. Except that they're all townhomes or detached single family homes. And so the answer is we do both. We buy new and we build new.
Okay, no, that's interesting. It sounds like you all are, but even in both of those scenarios, though, you're finding developers that you're partnering with in one form or fashion. It sounds like, or the first one, it's interesting. You're saying we'll buy that last 10, 15, 20% of your homes in a community you're building. That's got to be a relief to them, I would imagine. To take that last chunk of a community that they're developing, but then maybe it's the second one in the build to rent where you're more so finding developers to partner with. Is that accurate?
Slight modification. It's not developers that we partner with. It's the very same home builders that, anybody would be buying a brand new home from. We go to them and say, look, you're excellent builders. We are managers, visionaries, developers. We'd like to contract you to build this for us. And the reason that we do that is because we want to be good at what we're good at. We know that we can build if we want to, but because these builder partners have worked with us for such a long time, they're willing to build a product for us, and frankly, it works for them. To be able to build out a community of, call it, our average community is 200 homes. to do it in a way where it's efficient and they're not selling those off into the retail market, while of course having a nice margin. It works for everyone.
Has this method, how has it changed, I guess, over the years, but then even more specifically over the last, right, 2, 3 years?
The single family rental asset class is still in many ways a nascent asset class. I'm in it since 2008. I would say the majority of the large institutional capital started piling in around 2012, 2014.
Yeah.
The change is as follows: that there's still a huge deficit of affordable housing in America. And what we do is absolutely bridging that gap, is absolutely giving that affordable product, delivering it, I should say. And so the big change is that you see a lot of players that are capital market participants who, they get it. They bought into the thesis that we've bought into for a long time, but they don't have the market depth or the boots on the ground or the operations. And so what's happening is we're seeing a lot more competition for that land site or for those homes that we want to buy. But in reality, a lot of transactions aren't happening because people are trying to put the Lego pieces together. And it takes a long time to build a shop that works like a machine like we've done. So that's a big challenge that we're dealing with.
Yeah. Do you plan to continue on the single family side or shift more to multifamily or continue both avenues?
So Arc Homes for Rent is exclusively a single family home platform, and that's what it will always do. At the kind of sister company level, yeah, we do multifamily, and that doesn't necessarily interfere with Arc Homes for Rent. It's different company, different people, but we do focus very much so on the synergies between multifamily and single family, and we continue to enjoy some of those benefits.
Yeah, no doubt about it. That's awesome. The infrastructure, like you said, is not easy to develop, right? In almost any business, right? But specifically in say that type of operation, single family, that many. But I think it's nice though that you all are buying. When you're buying that last say 10-20%, of a builder's homes, you're still getting the economy of scale in one location, right?
That's right. That's right. Yeah, we are. That's why, dissimilar to, and I'm not being critical at all because very smart people and friendly competitors in the space, but most of our competitors, they are still buying off of the MLS or through other sources, what's referred to as scattered housing.
Yeah.
And I think it's a fantastic model and there's a great need for it. But from our perspective, because we're not looking to be, 100,000 homes, we felt that it's a lot more manageable when you could cluster, 15, 20, 50 units at a time, because you start, not only do you get efficiencies, as you've correctly pointed out, but you also start to create like these mini communities. We brand our product heavily. We talk to our residents. We've created an app for them, as I mentioned, and we want them to know each other and work together.
Are you all self-managing as well? I assume so.
Oh yeah.
Yeah.
Oh yeah. We manage everything in-house. We're vertically integrated across the board.
When did you all bring management in-house, or has that been from the beginning?
Great question. That has not always been. So when I started the firm, we were third-party managing. That lasted for about a year. And I concluded that if we were going to really grow in this space, we were going to have to go through the pain ourselves and figure it out. Regrettably, a lot of the third-party managers that came into the space early on, they were multifamily managers trying to figure out single family, and it's oil and vinegar. They are so different. So yeah, we have had to do everything in house.
There's probably not. I mean, and of course, we don't do single family, so clarify here. But there's probably not a ton of say, single family third party management companies who could even come in and manage somebody at your all scale, right? At that size.
There are third-party firms now that are managing larger scale, but I will always argue that we are going to be able to eke out more economics when we do it ourselves versus when you third-party it.
Yeah. Speak to just the way you've scaled, right? The way ARC has grown. You mentioned, I think you've mentioned a couple things already that's probably helped you all to do that, even just how tactful you all were about the new homes and partnering, with the builder or buying, the way you bought in bulk that way. and even caring about your residents in a way that I think is much more in depth than the majority, right? And probably anywhere your tenants have ever lived before, they're probably seeing such a big difference in that way. And I could see them even in that aspect, if they are growing out of that, say that multifamily apartment, like you're talking about, them wanting to stay with you all and come to one of your homes, but what are some other ways that you all that you scaled, that you've grown, maybe some key things that have helped you either personally or, in the business overall?
We have focused a lot, especially in the last 3 years, where we've had our the most scale that we've had since inception. We focused a lot on people, process, and technology. I would, if I had to weight those, I would say it's 75% people, and then the rest are the other two. I made a lot of mistakes early on in terms of whether it was the team or certain technology or processes even. And I will say that when we finally got it right and became an A+ team with people that really care and are really aligned, but most importantly, people that care most about our customer. Because there's a lot of great transactional people out there, and there's a lot of great operators out there. But the minute we started putting that customer first is when scale really started to jive for us. And so, in summary, I would say it's all about the people you have internally, and it's all about how you care about your people externally.
I love that, the people, process, and tech. I want to dive in here just for a minute or two. Who were your, say, first key hires, or even if you thought back, as man, I should have hired this person, or should have been one of my first 5 hires, or maybe even now, from what maybe a better question is, who would be your first five hires now if you had to start over?
I think that in this business, which is so heavily dependent on operations being right, because it's scattered no matter how you look at it. It's not one building in one place. I think that the head of property management, your head of operations, those are two critical roles.
Mhm.
I think followed by your head of asset management, which is essentially the person that's constantly reviewing the business plan for a set of properties or all properties, and making sure that you have to move rents, or your expenses are too high, or they're too low, or whatever the case may be. Um, those are 3 critical roles. And then I would say that your accounting and finance are right after that, because if you can't report clearly to capital markets, to investors, to partners, you're out of luck.
Yeah. No, that's operations and finance, right? That's where some of your biggest decisions have to come from, right? Uh,
Yeah. I'll share just anecdotally. I was having a conversation with our COO earlier today, and he asked me a question that he had not asked me in a long time. He said, "Today, what do you think the 2 most important areas are for you to be spending your time on?" And I said, "For me," I said, I'm the founder, the chairman. I gotta look at everything." He said, "No, but what do you think are the 2 most important areas?" I said, "Well," I said, "if we don't have deals and we don't have capital, we don't have a business. So for me personally, that's where I need to be spending my time. But for the business to work, if you don't have operations, if you don't have a COO that can keep it all together, or accounting or finance, you're done." So I hope that helps.
yeah, no, I think that's a great answer. I even love his question to you, and I think we should all ask ourselves that question often as founders, CEO, whatever, as leadership in the organization. We should be asking each other that, right? And just to continue to gain clarity on the most important things we should be focused on. It's easy to get shiny object syndrome in so many different ways, right? Not just where
That's
you're
right.
investing, but our time. I mean, just my time all the time. I'm trying to teach my boys that, right? It's so easy to be distracted. Let's think about what we're focused on. What is the goal? And all right. So, then you said 25% on process and tech. Any tips around process and tech? And I feel like internally for us, we're always assessing tech and what could do it better for us, or those things. But even the process as well. It's like, how should we be documenting these processes so the next person knows exactly how to do this, or maybe some tips behind how you have done that well, or even if you had to start over today, what you would do these things to create the processes or use these pieces of tech. What would that be?
Well, look, I'll share just on a personal note. Question that I asked myself a year and a half ago when I realized that we needed to invest a lot more into technology, into process, because they're very much interrelated. Was as follows: there was cash flow there, and I said, is this cash that I need and that I need for something specific personally, or is my business going to be better served if I improve the technology using the same cash? So I like to tell my team, if you can continue finding holes in your business, either with process or technology, that you can be investing in, don't put that money in your pocket. Keep investing, because it's going to pay you in multiples. So that's just kind of starting from a philosophical standpoint. There aren't a lot of models to follow. And so when you think about tech and process, yes, you can look at the top REITs in our space and say, well, what have they done? Well, one firm spent $30 million putting together a CRM system that they ended up scratching 2 years later. Well, we can't do that. We're entrepreneurial. So we basically started with a big easel board, drew out the ideal, and then went to a bunch of vendors and said, if you can create 50% of this, you got it. This is your deal. Millions of dollars later, we are still not there, but we are a heck of a lot closer than we were before. And frankly, it feels really great to have invested that capital into technology, because I know that that's ultimately going to make my team feel better. I know that it's going to make us more efficient. Our stakeholders are going to be happier, and our customers are going to get better service from us.
Yeah, no, awesome. What would that be? What would be your most important piece of tech right now?
I think our CRM system, our customer relationship management system, is probably the most important in first place, followed by our app. Our app, which is proprietary, that's our face with our customers, with our renters. Everything that they do, from a maintenance request to offering them, deals on local restaurants to discounted groceries, we do everything through that. That's our brand. And so we need to make sure that thing flies 24/7 perfectly.
Love that. Yeah. Can I ask what CRM you all use?
Salesforce.
Yeah, that's a beast in itself. Did you all hire a third-party team to help you all implement Salesforce?
We did. We hired a third-party team. We hired an internal team to work with the third-party team. A host of years, I continue to work on it. Yeah, it is. It beast. That's the word.
Yeah, for sure, no doubt about it. Well, I appreciate the context there as well, Jordan, and just some of the path to getting to where you're at now, the focus on people, processes, and tech. No doubt about it, man. It's so important, and I love how people is the number one thing. So I could not agree more. This is a great place to end this segment, though. Before we're gonna do another segment with Jordan tomorrow. So I want the listeners to know, hey, stick around. We're gonna hear more about Jordan's success and some tips of just scaling and growing and how he has done this. Jordan, how can the listeners get in touch with you and learn more about you?
Awesome. So my email is Jordan, Jordan, at T as in Thomas, I as in India, M as in Mary, G as in George, M as in Mary, T as in Thomas.com. Jordan at timgmt.com.
Thank you for being with us again today. I hope that you have learned a lot from the show. Don't forget to like and subscribe. I hope you're telling your friends about the Real Estate Syndication Show and how they can also build wealth in real estate. You can also go to lifebridgecapital.com and start investing today.